Hello again, fellow BeachBum traders. Welcome to part one of our weekly trading game plan for the trading week of August 1st through August 5th. And here we're going to hopefully come up with some strategies and help you make money trading a recession. So stick around to the end and we'll talk about various strategies we've been talking about for quite some time about how to make money trading a recession. And then hopefully you'll come back again tomorrow. We'll apply those strategies to selecting stocks to add to our watch list for the trading week of August 1st through August 5th. So we'll go ahead and get started. Thank you again, Spacula, for joining us for our live stream and also for that super chat. It was greatly appreciated. And thank you again for all your support. So we'll start. Here's our Google document with our notes for this weekly trading game plan for August 1st through August 5th. You can find these notes in our Google public drive via the description box below. Good morning, Alan Hirschberger. Glad to see you. Thank you for joining us for the live chat. So again, we're going to talk about how do we make money trading a recession. We've been talking about preparing for this recession for some time. Now, as we'll see in the GDP data, we're technically in a recession, although there's some debate about whether it's a real recession or just a technical recession, etc. We'll talk about that. It doesn't really matter all that much. We want to make money trading, whatever they want to call it. So we'll go ahead and get started. We'll jump into FinViz. We'll look at where the markets ended up on Friday. We'll look at where the indices are sitting. And again, you can find this link to FinViz in the description box below. So we can see on Friday all the markets kind of rallied, all ended up positive. We had a little bit of a market on close that was a little negative, a little downturn at the end. We can see most stocks are now above their 50-day moving average, so more are above than below. Mixed new highs, new lows, more advancers than decliners on Friday, but we can still see that the majority are still sitting below their 200-week or 200-day moving average. We see most of the FANGs, the big caps, did well. If we look at some of the news, the latest news, see crypto prices crashed. See GDP, we'll talk about, the recession, the decline in GDP, global economies, etc., Costa Rica, UK, etc. We look at the futures, we see oil recently declined, energy's been very volatile, see natural gas ran up again, and then we see all the futures on the indices are positive. So, and we could see the treasuries recline quite a bit, below 3%. Still a little bit of an inversion in the shorter term treasuries. That decline in treasuries is not so much the quantitative tightening, which would be the Fed selling, so that would push prices down. This is an indication of recession, and the bond market is saying, yeah, we're definitely headed into a recession, and it doesn't look good from that standpoint. That's what the bond market is telling us. Good morning, Tanvir. Thank you for joining us for the live stream. Glad to see you again. So let's quickly look at the indices. We'll look at the SPY for the S&P 500 quickly, see if do we have confirmation that we're breaking out of this bear market? Are we still in a bear market? So from the short term, we can see it's approaching this pivot point, this support level. Just again, this is not financial advice. This is all my opinions, and you're going to hear a lot of my opinions in this terms of the strategy of how to make money trading this bear market or this recession at the end of the live stream. But again, not financial advice, all my opinions and for your education only. But I would expect it to test that pivot point and probably retrace some. So short term, that would be my expectation, seeing a chart like that. If we zoom out, I like to look at the weeklies a little bit better. We can see, okay, it's testing its 50-day moving average. Again, I would expect a resistance from that moving average. So again, I would not be at all surprised if we had a downturn early next week, again, hitting that resistance, testing that resistance, and bouncing down. Now, where we go from that is the question. Are we going to continue to make higher lows and higher highs? Are we going to break through that average and turn back into an up market, or are we going to roll over and turn down? So again, a lot of still very indecisive. I wouldn't say we're necessarily out of our bear market yet. And again, tomorrow we'll talk about various ETFs, various stocks that we can play, a retracement whether it goes bull or bear after that. TLT. Yeah, we'll talk about treasuries, and particularly tomorrow we'll look at a number of the ETFs that I'm watching for treasuries. So yeah, we'll definitely talk about that probably more so tomorrow, but we'll look at the futures. Yeah, I've been watching that as well, Tanavir. So again, the Dow, very similar. It looks like it, briefly broke through its moving average. Look at the Qs. They're all going to pretty much look the same. We had this nice rally. We'll talk about the economic data and that the fact that the markets really didn't flinch much at both the hot inflation data and the negative GDP data. So Qs, very similar. Broke the 50-day moving average. We'll see if it can stay above that or if it's going to reject from that moving average and turn back down. The Russell IWM. So again, they all look very similar. All the markets are moving together right now. So we'll look at the VIX, VX, and this was interesting too because even when the markets were moving down, the VIX was reverting. It was trending down, and you can see it's broken down below the 25. Now it's headed to the 20. So I would expect it to continue to retrace down to at least the 20 unless we get some kind of black swan event that's, we really don't have anything that we would expect that would trigger volatility in the next week or so. So I would expect this to continue down to 20. Whether it breaks down below 20 and continues down to that 16, 18, or 16 area, we'll have to see. But again, tomorrow we'll talk more about trading volatility with different ways that we can trade a potential black swan event going forward. So that's all the indices and where we're kind of sitting in the markets. Again, we had a pretty good rally this week. They said it was the best month since, I think for the SPY, since 2020. And again, we'd talk about some of the reasons why that is and our hypothesis why that is and how to make money trading that reaction. Let's look at the groups, the sectors quickly in FinBiz. And again, we've got a whole video on how to use this groups tab in FinBiz to look at the various sectors, hot sectors, etc., and drill down, etc. So again, Friday we saw almost everything. Again, we're seeing a lot of sector rotation. So these guys flip back and forth. Energy's been flipping back and forth. Basic material been flipping back and forth. And again, that's one of the things we'll talk about is how to make money trading in the recession, as we can trade the sector rotation. We can make money trading the sector rotation, just watching which way it's going. But we can see Friday energy was positive, industrials, consumer cyclical. Again, this is a sector rotation thing and not a longer term theme or strategy in my opinion, and having consumer defensives negative and healthcare negative. Again, in my humble opinion, that's just a sector rotation thing. So again, for the week, very similar. Energy, basic materials were positive. Technology did do well, and again, this week, consumer defensive and healthcare were negative. So similar for the month. So not a lot of interesting things there. Let's look at the industries. Yeah, I knew solar, oil, Chevron, and Exxon both report beat on earnings, and so it's not surprising that the oil companies would be top. They working on passing this infrastructure bill. So solar, it's got some support for solar since Manchin came out and said he'd support it. So the solars ran. Some of the commodities, etc. Again, oil, natural gas, steel. People were talking about steel on Friday. And again, it's some counter-cyclical stuff. Yeah, you'll see too, uranium all ran up. Again, energy ran up, all our uranium stocks. We got a nice recovery we'll see in silver and also a start of one in gold we'll see in the futures. So that was positive. Good morning, Douglas PC. Thank you for joining us. Glad to see you again. I'm going to try to go through all this pretty quickly. I've got a lot of material in the strategy section about, how do we want to trade a recession? How can we make money in a recession? So hopefully you've heard most of this data. We'll talk about the economic data. And again, as this stuff comes out, I try to post this in our Surf the Market Reports channel in our Discord. You can find an invite to our Discord in the description box below. It's free to join. And again, as economic data comes out, as I get the earnings calendars like from Benzica, I try to post them in that Surf the Markets channel in our Discord. So we'd highly encourage you to join us in our Discord, talk about trading, get all the news, etc. One of the notable news that came out on Monday is, I don't know if you heard, Russia cutting the flow of natural gas through their Nord Stream pipeline to Europe by 50% to 10% capacity. So again, they're putting the squeeze on particularly Germany. I expect them to continue to put pressure on Europe via their supply of natural gas. So that causes the natural gas price to be very volatile, and you'll see this week it was extremely volatile, ran up, went down, etc. Welcome, Bonds. Glad to see you. Thank you for joining us in the live stream. So we got a lot of data this week, and the interesting thing about most of it is pretty much the market shrugged it off. We'll see. We had hot inflation data, poor housing data. We're in a recession. GDP was down, and pretty much the market shrugged it off and went up. And my hypothesis is that there's a ton of money has been sitting on the sidelines waiting for this data, waiting for the Fed's interest rate decision. We got our 0.75 interest rate hike is pretty much what we've been saying, what we've been expecting for quite some time. It was pretty much as expected. So the market shrugged it off and went higher. And I think get all this money on the sidelines. It was jumping in, waiting for an opportunity to buy. So again, not terribly surprising, but it does tell you how resilient the market was to all this data. So again, we see the housing data was kind of poor. And we continue to hear that, how new home sales is down, the price index is down. This was a little negative. Services were a little poor. Then Wednesday, again, durables wasn't bad. That was a little bit of a surprise that the durables data was pretty good. Inventories, we got crude oil was down. The inventories were down more than expected. So again, that spurred the price. Crude peaked up over 100 at one point again. And gasoline. Okay. So then we got the FOMC interest rate decision, 75 basis point increase, pretty much, again, what we have been saying and expecting. So even though people were talking about a full point increase, we didn't get that. And, Powell said, further further interest rate increases would be data dependent. The market's kind of like that data dependent piece because they interpreted that it might not just be a given 0.75 or whatever going forward. They'd at least look at the data going forward. And then, Powell came out and said, well, he doesn't think we're in an actual recession. It's just technical recession, and Yellen came out and said the same thing. But as we'll see, is technically, by definition, we are in a technical recession. They estimated interest rates will go to 3 to 3.5 by the end of the year. So obviously it's sitting at 2.5 right now. So given that, it should go up 0.5 to a full point by the end of the year. And that they're going to ramp up their quantitative tightening, which is selling of bonds. So they've been running a little bit below their quota. So we would expect more selling of bonds to occur. I would expect, given that the prices are high, that they would sell into the higher prices and make more money. That would be what I would expect, what I would do. Then we got GDP data, and it just confirmed what we've been saying for a whole quarter now, that we're in a recession. All the data's been pointing that we're in a recession, and this all just confirmed it. Yes, we are in fact in a recession. We got a negative 0.9. It was expected to be up. It was not as bad as the previous reporting, and it may get a little revised. Also, the job market is weakening a little bit more initial jobless claims than were expected. And again, and then on Friday, we got that inflation is still raging hot, and it's raging hot at the beginning of the supply chain. So you've got your producers' price index, the core producer price index was hotter than expected. So again, there's no sign that inflation is abating anytime soon. So again, as we've been saying for a long time, we want to inflation-proof and recession-proof our portfolios, and also trade and then be ready to trade in an environment with hot inflation and a recession. So that's where our strategies will focus this week. Another number that many people don't pay attention to, but the Baker Hughes, the rig count numbers came out, and we could see it was significantly higher than before. So they are putting more rigs online, so that is would increase supply. So, but again, most people don't really pay much attention to that, and the oil prices just continue to go up. So now let's look at the economic news for next week. And so I'll jump over to investing.com. Another place you can easily get all these links to all these tools is on our homepage, beachbumtrading.com, bum without the U. You go down to the links section, it's got all the links to all the tools we use, our trading platforms, our social media accounts, etc. So it's a quick and easy way to get to all these tools. We want to look at the economic calendar and go news, economic calendar. Again, in our Discord, you'll see I snapshot the data out of this and paste it to our Discord. I also put it in the notes, as you just saw. So what do we got next week? So we got some manufacturing PMI data. So again, more inflation data. We'll see if that shows any decrease in inflation. I wouldn't expect it. Then we've got JOLTS, job openings. Again, we expect maybe some decrease in job openings, essentially companies closing job openings. Got an OPEC meeting. So far, OPEC has decided not to increase above their previous plans, so we don't expect a change there. Mortgages, similar services, PMI. Factory orders, ISM, again, more inflation and some economic health data. We've got oil imports, oil inventories expected to be up a little bit. So nothing, earth-shattering major. Now, since we're out of the FOMC meeting, we're going to start to hear FOMC members are going to come out and talk, and that might create a little bit of volatility. But I think they'll say pretty much what has been said. So, and then Friday we've got some payroll data, some jobs data. So again, that will tell us what the health of the job market is. Unless it gets significantly worse, I wouldn't expect much of a change in the Fed policy based on that. So again, you can always, get the link to investing.com, jump over to the economic calendar, and flip over to next week. You can also get today, tomorrow, etc. So you can look at just a given day. And then we'll also look at the earnings calendar here real quick. Again, we're very much in the heart of earnings, and this is part of our strategy for trading the recession is that earnings are going to matter. It's mattered for quite some time, so it's important to know who is reporting earnings. Is it related to a stock you hold, a stock you want to buy? Because they will move in sympathy. If somebody comes out, Walmart reported bad earnings, and we had Snap reported bad earnings. They hit all the digital media companies, etc. So they're going to move in sympathy. So it helps to know there's tons of earnings. So I would advise, scrolling through, seeing if there's anything that you care about. You can do finds on this page, etc. I'll also quickly bring up the Benzinga graphical version, which again, you can find the link both in our notes and in our Surf the Markets channel in our Discord. This gives you a nice graphical, quick view of the major companies reporting earnings. So again, we see a ton of earnings. Yeah, we're gonna talk about, strategies about what is this going to mean for earnings going forward. Now, again, these earnings are for the prior quarter, so that was a first quarter of GDP decline. So you wouldn't expect them to be real bad, but you're hearing a lot of companies are guiding down right towards the end of the year. So, and they're getting punished for that. Because obviously if their earnings are going to be worse going forward, then people are selling off the stock. It's not worth as much as it was going in if their earnings are going to decline. So then the price has got to come down to keep the PE ratio even just where it's at. So again, we'll talk about that more too. So again, you can look at all these, just tons of different earnings, different sectors. So we've got still some digital media, got manufacturers, got Uber, Lyft, got some pharmaceuticals, still got some oil companies, more tech. Again, the FANGs, Amazon and Apple did pretty well. So that was one of the major concerns since they're so heavily weighted in the indices. So. Okay. Probably going to jump over to the markets. Okay, the next FOMC meeting, there is no August meeting. So a couple weeks ago, we talked about trading in the eye of the storm, and we're kind of back in this eye of the storm. There isn't a whole lot of there's no FOMC meeting in August. They have a Jackson Hole meeting where they do more speeches. They talk about more strategy and economic theory, etc. So there might be something coming out of that, but there's no FOMC meeting. There's no talk of an emergency FOMC meeting. So we're not going to get any further interest rate hikes until September. Again, then we'll listen to what they're saying. 0.5 to 0.75 is kind of would be my guess, and I don't think it really will have a major impact either way. I think the markets are pretty much expecting that. We've got to get another point tacked on by the end of the year is the expectation. So if I jump over to Webull, I'll jump over to the market screen in Webull. Just a quick reminder, if you're not already using Webull, it's our favorite trading platform. We use it both for market analysis and primarily for our trading. They're still offering their 6 free stock deal. So again, you can get 6 free stocks, 2 for just opening the account, valued up to $300 each. And then by depositing any amount, even a penny, you can get 4 more free stocks up to $3,000 each. So again, if you're not already using Webull, we'd highly recommend it. At least get your 6 free stocks. You can cash them out and take the money if you don't like the trading platform. But again, it's our favorite trading platform. It's where we do the majority of our trading. So this is the market screen of the online browser version of Webull. I have a whole video on how I use this to do market analysis, so I'm going to go through this very quickly. I'm not sure what AMTD is, Tanavir, and I'll look at it in a minute. Maybe I'll look at it now, just while it's convenient. I don't know. It sounds like, sounds like something on the news. Capital markets, Hong Kong. I don't know. I don't know. I don't see any news. I'm not familiar with it. It's a Hong Kong stock. I'd have to research that further. We can talk about it more tomorrow if you want to. Okay, so if we look at the histogram from Friday, we see more advancers than decliners, but it's not, super high percentage. The advancers was small. See, NASDAQ got a lot of inflow. NYSE got, a declining inflow. So again, big tech rally, big NASDAQ rally. Again, you can also see the near-term earnings calendar here on the market screen of FinBiz. So it's nice to be able to see what's coming up in the very near term there. And we can look at the best performing industries for the week. We see that renewable energy, solar. We see uranium really ran, oil and gas, so energy. Here construction did okay. Utilities. That's interesting. That's a volatility. They put it under government. Materials, construction materials, utilities, mining. Auto parts didn't do bad, get more utilities. So energy, utilities, some basic materials, etc. Look at the ETFs. So up on the Dow, bull on the S&P, up on the S&P. VIX, I would expect it to be bearish, down. It's not clear. Russell up. And that looks like I'm guessing that's an up on the FTSE. We'll also see when we get to the futures that the European markets and the euro bounced up as well. So industrials did well. Healthcare, again, healthcare we know was down. Energy up, utilities up. Communication services have been a poor performer for a while. Basic materials rebounded. Consumer cyclical looks a little rebound. Defensive was negative. Again, that's counterintuitive given we're going into a recession. Real estate did well. Financial services, now the interest rate hike obviously benefits particularly regional banks, at least in the near term. So financials finally got a bounce. Commodities, nickel, agriculture, industrials, grain all did well. Again, we'll see all this more in the futures in a second. So there's the yen. We'll see the yen rebounded as well. Again, that's kind of a safe havens, flight to safety. We'll see the dollar did weaken a little bit. The yen came up, the euro came up, etc. Yep, euro, yen, Again, the dollar finally did roll over a little bit. So yeah, let's look at the futures quickly. Again, I have another video that goes through how to use this futures tab. Again, I use this heavily during the day to watch what's coming. What are the futures telling us about the direction of the markets, directions of various commodities? We can see here in the futures, all of the indices are kind of approaching their previous highs, but they haven't quite tested those previous highs. Although it looks like the Nasdaq, it looks like it broke above its previous high, so that's a positive indication on the Nasdaq. The others, I would kind of expect them to test that high and possibly get rejected from it, particularly since we see those gaps. So a gap fill would not be unexpected. See the European stock market really rebounded. Russell has not tested its previous high, so again, I wouldn't be surprised to see it test that previous high, possibly get rejected, and then the question is, does it have the strength to try to push through that high, or is it going to fail and go back down? So again, we see the VIX is reverting, it's declining. I'd expect again that to trail down to 20. As we'll talk about how to play that, how we're going to play that tomorrow more. We see oil kind of bottomed, turned up a little bit, went as low as 95 at one point. And we see all the volatility in natural gas. I kind of missed that peak. I would have liked to catch that, but it didn't quite hit its previous high. And then it trailed down. So if you were playing boil and cold on a shorter time frame, a lot of money to be made in these guys. We'll talk about them again tomorrow. But you can scalp, day trade natural gas using boil going up and cold, KOLD, going down. Play oil with gush going up, or UCO, which is the WTI price, and drip or SCO going down. See gold and silver made this nice gap up, and then there looks like they're headed up, which is positive. Again, I think there's, hopefully it's still got some room to run. Copper made a rebound. That's a little unusual, given copper is usually an indication of a recession. It's also very sensitive to China, and I guess China's locking down in some areas again. Again, all the metals kind of rebounded. This was kind of crazy. I didn't know what that initial gap up was, and Sonia found out. I guess there was a die-off of heat stroke die-off of cattle. I think it was in Texas, and that probably is what that gap up was. I'm not sure what this gap down in lean hogs was. We haven't been able to confirm what that was yet. And we can see some of the other commodities rebounded. So here's the treasuries. And again, this is counterintuitive given quantitative tightening, but it's again an indication of the recession. Is okay, everybody flight to safety, we're in a recession, go buy bonds. And so they drove the prices up. Again, probably a short-term move, given that it's, flight to safety. The yield on these bonds below 3% won't get you above inflation, so it's not really a solution for retaining, conserving your wealth, buying bonds. So again, I think it was just a flight to safety. We're going into recession. It's typical of the bond. So I would expect with the quantitative tightening, you were talking about TLT. I'll have to look at that again. I can't remember if it's on the 10 or the 20. And we'll look at that tomorrow, where TLT is sitting and what its risk reward profile looks like, and how we might play that on all the various bonds. So, and also we see this rebound in the yen and the euro. and the decline in the U.S. dollar. So, and we could talk about ways we might want to play that further. But I kind of, well, the risk reward on the ETFs I was watching for these guys wasn't all that attractive anyway. So we'll see that tomorrow again. Thank you, Spacula. Please, yes, if this is beneficial to you, please hit the like button. If you're not already subscribed, we hope you'll subscribe. And we hope you'll come back tomorrow and we'll talk more about, what individual stocks, ETFs, etc. are we looking at to be able to play these various themes. I've got a lot of data and strategies for how to make money trading a recession. We've been talking about this, as you'll see, since as far back as May. I put all these references in the notes. I will probably copy paste them into a comment, a further comment under this video. I'm also going to include, and I'll try to add this to the URL. I've been trying to get the timestamps for all these strategies. Again, we've been talking about strategies for inflation proofing and recession proofing your portfolio for quite some time, and there's a lot of information in each of these that we've been compiling, so I won't go over that. I won't repeat that same information, but we will, I'll put those references there. I'm going to quickly just open this definition of a recession. And while that guy loads, I'll talk a little bit about trading. Let that guy load and see, what do they say in Investopedia. And again, in this previous video, we went over this in more detail, but again, it tells you what the technical definition of a recession is. And then also, I want to look at some ways to play it. So. Okay, so again, you can see, what the definition is, and again, I won't belabor this. We've gone over it in more detail, but it's 6 months of decline. Again, you can read all this. What does it mean? Who actually determines? Blah. What I really wanted to look at is what does it mean in terms of trading. So it shows you the lengths of typical recession. Okay, so here's what we're really going to talk about is the strategies for trading in a recession. Is low debt, good cash flow, strong balance sheet, and avoid highly leveraged cyclical speculative stocks. And then they talk about that. Unemployment's going to increase, layoffs. We'll talk about that further. These are ways to see it. We've been watching this data for quite some time, causes, etc. So again, you could see this article. It's in the reference to that previous video, and I'll probably put it in the comments again, and you can access it through the notes as well. So let's talk about, how do we make money trading this recession? And again, this is all my opinions, my ideas. Here's, what I'm thinking about is how am I going to make money trading this recession? So if you have different ideas, etc., I'd love to hear them in the comments, in our Discord, social media, etc. But hopefully this will help. And, let's have a good, healthy discussion about all of them. But I think it's important to separate the different trading styles. Like I said, different strokes for different folks. Think about this in what time frame, what type of trading are you doing? If you're day trading, momentum trading, or breakout trading, essentially it doesn't really matter to you, is you're typically chasing whatever's running at the moment. You don't, the fundamentals are not as important. Whether the company's got a healthy balance sheet, high debt, etc., is much less important for a short time frame. um, you just don't want to get stuck holding the bag of a bad company, right? Is if they do have high debt, that if they don't actually have any sales, they don't have any earnings, etc., they're not going to hold up in a recession. I would expect offerings to decrease. These companies that are not making money are going to have a very hard time raising money in a recession. I don't think you're going to see a lot of startups, etc. Because again, venture capital is drying up as well. So money gets tight in a recession, and we'll talk more about that as well. But again, I don't think it impacts you if you're doing a short-term trading. You see what's running, what are they pumping, you ride the momentum, you get out, make your money, and you're fine. Or you short it if you know it's just a pump, an unhealthy company. You're going to see the shorters, people shorting could get pretty aggressive because there is no foundation for those poor companies to rest on. Now, from a swing trading standpoint, again, you're holding for a longer period of time, but it doesn't change a whole lot either. You want to do your due diligence, do your uh, analysis of the fundamentals of the company, make sure if you're going to hold it for weeks, months, they're not going to, come out with an offering. Again, offerings aren't going to be very common. They're not going to go bankrupt. They're not going to come out with bad news, etc. It doesn't change much. But again, we're looking for these sector rotations, these extremes. So that's what I'm going to be looking at in terms of swing trading. Is follow these sector rotations. If energy's trending up or it's bottomed, there may be opportunities. We saw gold and silver bottom, turned up. That was an opportunity. We saw one in uranium a couple weeks ago, made some money there. So again, I don't see that it changes a whole lot. It's knowing what are the themes. You'll see tomorrow we bought Big Lots again. We like that discount store theme. So again, we'll talk about that more as well. And then if you're a long-term investor, if you're going to hold something for years, you want to focus on value. Is the company a value? Are they undervalued? That's the time to buy, is when it's undervalued. Also, you're going to see a lot of longer term investors. They need to get dividends that's greater than or equal to inflation. So you've seen and you'll continue to see a flight to companies that have a stable dividend, and it's going to at least if not beat inflation, at least preserve their capital. You'll keep hearing this word, capital preservation. That's, they need to keep as much of the value of their capital as possible while inflation eats away at it. So the next theme for talking about making money trading in a recession is, and we've talked about this for a while, is think about what it is you're trading. Is it a necessity, or is it something that's discretionary? As you'll see, your discretionary spending on discretionary is going to decrease in a recession. People are going to have to tighten their belts, tighten their budgets, and they're going to be focused on, what do I actually have to have? Is it a necessity? And so they're going to be cutting spending on discretionary. We saw Walmart came out and they warned consumers are decreasing spending on higher margin discretionary items like clothes, durable goods, etc., and focusing on necessities, food and gas. And so that's going to hit their profit margin. So anybody that you're looking to hold for any length of time, is their sales and their profit based on discretionary items? If so, then watch out, because spending on discretionary is going to decrease, right? Similarly with enterprises, um, and Douglas PC was mentioning earnings, the only way their sales are going to decrease, so their top line's going to be decreasing because in a recession, GDP and typical sales are going to decrease. So how are they going to keep at least stabilize their PE ratio, which is price over earnings? They have to cut costs. So they're going to be focused on cutting costs. Well, where's one of their biggest costs? It's people. So you can expect they're going to be, cutting, hiring, and eventually laying off people to cut those costs. And then we also heard, they're going to look at what are my discretionary costs? Where can I cut? And sales and marketing, like digital advertising, is something that they can cut because they can live without it. It's not necessarily good to cut, but they can live without it, and that's what they're going to do. And we heard that with like Snap, and I think Facebook, Meta came out too. Decrease in digital ad spend. YouTube, Google has come out. A number of people have pointed that out. That digital advertising spend is decreasing. So again, if you're looking at holding any kind of enterprise, make sure again that they're going to be cutting costs. Cutting costs not necessarily negative, because it possibly makes them leaner. But whoever they're spending that money with, like digital advertising, it's going to be a negative on those suppliers. The other thing I expect with enterprises is them hunkering down. And what I mean by that, hunkering down to ride out the recession, is delaying or deferring expenditures. So I expect they're going to defer, upgrades to hardware, software. So those companies that are reliant on those upgrades of enterprise software, well, their sales are going to get deferred. They're not going to do it now until they can at least see the light at the end of the tunnel of the recession. Oh, and just a note about all the previous references I'm working on, and that's where I got the timestamps. I'm working on putting together one or more standalone videos on recession proofing, inflation proofing, trading recessions, and I'd love y'all's feedback. Again, in the comments in the Discord, if you'd like a series of shorter videos on that topic, or one long video with all those together with some commentary in between. So please let me know again in the comments in our Discord, etc., which you'd prefer is a series of shorter videos or longer form videos that are more comprehensive. So please let me know. So another thing about trading in a recession, that I wanted to bring up is a bifurcation of the markets. Is you want to also think about, what market is your company targeting? And I'm going to change this to income bracket. So is it a high end, a mid tier, or a low end? The company you're talking about, or you're looking to buy, is it high end, mid tier, or low end? High end luxury stuff is generally going to be resilient, right? Because your higher end, your luxury brands, they may actually even do better if they lower the prices. But again, they're going to be very resilient to a recession. Your low end, again, as we saw in Walmart, it's going to be trimmed down to the bare necessities. So anybody who's selling, basic food, gas, etc., on the low end, or they're able to lower their prices, maintain their margins, they're going to do okay. If not, if they're relying on discretionary items, they're going to do poorly. Yep, Dollar Tree, Dollar General, Big Lots. I think your Costco's. Walmart really messed up. They messed up their inventory. I was very surprised that they messed up. I thought they were smarter than that, but they messed up their inventory. So there's going to be big sales at Walmart, for clothing and durables, etc. Same way Target messed up their inventory, and so they got to discount that, and their margins are going to be tighter. So talked about income brackets, also by generation. I think there's going to be significant difference in where the generations spend their money. My opinion, again, I think baby boomers are going to be looking at capital preservation. So, dividend stocks, possibly, gold, silver, probably some bonds, things like that. They're trying to preserve their capital because inflation is eating it away. Also, healthcare. They don't have much of a choice. That's a necessity. As you get older, it's not. You've got prescriptions, etc. You have to fill to stay healthy. So again, I think healthcare will be buoyed up by baby boomers. Now, you want profitable healthcare, not if they're burning through their cash, they have high debt, they're not actually making money. I wouldn't touch that. Um, Again, my opinion. Now, millennials, from what we've talked to, they're going to spend their money on experiences, travel, going to concerts, going to Broadway shows. They're going to spend their money on experiences. Whatever discretionary funds they have, from what I've heard, they prefer to spend on experiences. So, again, two major populations of our society, and that's where I'm guessing they're going to spend their money. So again, we want to follow that money. Well, Douglas, you sold a camper RV. I'm looking for a RV. I want one that's drivable, not a towable. So anybody that's got an RV, we want to hit the road and trade while we travel and see the country. So anybody that's got a RV, let me know. So again, we've talked about this. I won't belabor these. We talked about the strong dollar last week, so y'all can hear commentary on that. Again, we're running long, so yeah, I don't really want a fifth wheel. I want one I can drive and uh, easily. But anybody that's got one, we are seriously looking. So we talked about, again, the strong dollar. You're continuing to hear layoffs, reducing hiring, etc. So I won't belabor those points. Maybe we'll pick them up again next week. So please let me know if you have any questions about any of these topics about making money trading a recession. If you have any other ideas of how to make money trading in a recession, please let us know in the comments below, in the Discord, via our Facebook group, social media, etc. We'll continue to add to these ideas. And as we learn more, and please come back tomorrow, and we're going to be applying these strategies, pick the stocks that we think are worth watching for both next week and going forward. Again, we'll look at ETFs, treasuries, etc., see how we can play these various trends. And finally, again, we've got a poll on the community tab on our YouTube channel. Please vote on the poll. Go to the community tab of our channel and let us know when's the best time for these game plan videos, etc. If you have other suggestions, we have a suggestion box in our Discord. We're always open to suggestions, etc. So again, we look forward to interacting with you there, and hopefully we will see you again tomorrow for part 2 of our weekly trading game plan. Again, we'll update our watch list, talk about individual stocks, etc. So if you have questions about other individual stocks you want us to look at in advance, you can hit us up in the Discord, in the comments below, in social media, etc. So barring any other urgent questions, I wish you all a great day and good luck. And have a great trading week next week. And we'll see you all tomorrow for part 2. Have a great one. Thank you. Bye.